To go through some of the items that I'm seeing people use to kind of achieve what they're hoping to accomplish.
Mhm.
And Dad, I'll ask for your feedback on each individual
Sure.
form and how people might want to use it. So the first one would be the termination and deposit release agreement. Um, it's amazing to me, and I think it's a wonderful thing that a lot of people they've never used this form. I think that's great. I've heard that so many times. Here's the form: termination and deposit release agreement. Seller and buyer hereby release each other from rights, duties, obligations, and claims arising out of the sales contract. And you just simply put in how much the buyer is going to get and how much the seller is going to get. And so if the buyer's terminating, here's what I usually recommend is I have the buyer send me an email saying, I terminate. Maybe have them have a reason, maybe not, but I just need them to tell me I terminate. And then I'm going to have them sign this form and we'll dictate who gets the deposit based on the circumstances. And I'll have the buyer sign it. And then I'm going to forward the buyer's email and the signed form over to the listing agent and say, unfortunately, the buyer's terminating. Please see attached and below. Feel free to call or email me with any questions. And I'll usually put in the reason for it. We're terminating under the condo review period. We're terminating under the as-is contingency or financing contingency. If it is financing contingency, I would probably include the loan denial letter or something of that nature.
Hmm.
So this is the form. And if notably, if you look at number 3 here, seller and buyer also agree to release from claims, obligations, liabilities, the real estate brokers. And then they give some sort of limited liability to or release liability to the escrow agent regarding the deposits. Dad, you used this form before?
Use it all the time for two basic reasons. One you hit on, and I'll use your example we were talking about right before the show started, where you had a buyer turn over a $500,000 deposit to the seller. That same buyer can go back up north if they're from up north, tell their lawyer what they did. The lawyer's going to say, well, did the realtor tell you this, or did the realtor explain this in the contract? Let me see that contract. And then they're going to second guess everything the realtor did. So getting that release is massive. The second part that I use it for is if the seller is getting the deposit, your listing agreement, if it's a NABOR listing agreement, allows you to get, up to half of the deposit, no more than what your commission would have been had the deal close. So, if it's a $500,000 and it's a big deal and this buyer is a one-off, or this seller is a one-off, you at least want to know that you're entitled to part of that. And if you're going to waive it, let your seller know what a nice guy you are. You're waiving this, and perhaps get some more referrals or get something out of it. You might get a
Yeah,
reduced amount.
yeah, exactly. Let me show you guys where that is. I had a conversation with a broker yesterday who didn't realize that that was in there. So this is the NABOR listing agreement, and you look under section 9 default. It
Right.
actually says if defaults are retained by seller, 50% thereof, but not exceeding the full amount of the compensation to broker, shall be paid to broker as full consideration for broker services, including costs expended by broker, and the balance shall be paid to the seller. So actually, in that scenario, Dad, that we did have a client who walked away from a $500,000 deposit. That deposit was then wired to the seller's attorney, and the seller's attorney directed that money. 50% went to the listing agent and 50% went to the seller. Amazingly, the listing agent then found a buyer like a week later and sold it again. So that listing agent did very well on that deal. The buyer's agent not so well. It was pretty brutal for the buyer side, and
And
that's the
here's an
side I was
example
on.
of the deposit thing. On that exact example, your listing agent could go to the owner and say, under our listing agreement, I'm entitled to $250,000, but because you're such a good client, I'm only going to get 100,000. And this
Yeah,
is something
or
the realtor
or
didn't know was
even what
there.
I've seen, which I think works really well, is let's say you take the $250,000 or half the deposit. You
Right.
say, look, I'm going to use this as a credit towards the commission as when we do sell it. So I'm going to take
Keeps,
this now. I'm going to get
yeah,
paid, and then I'm going to continue working for you. And when we close, then you'll basically get the balance because you
that's
won't have to
brilliant.
pay me twice. And I like
It
that
keeps the
because it
client.
It keeps the client, it gets you paid. I really love that option. I think it's fair because the worst that could happen is then the seller turns and blames you and doesn't renew your listing. It's like, well, I did sell it. So I guess you just have to be a little bit careful.
So they can
Now,
make money on the terminations, and if you're missing that opportunity, you're really missing a lot.
well, and I would say a lot of people don't take advantage of it, so don't feel bad if this is something you decide not to take advantage of.
Yeah,
I understand. What I would recommend is, like you said, just let the seller know you're doing this. Get some credit for it. Maybe
yeah.
maybe they'll extend your listing. You say, look, I'm not going to take the deposit. I'll let you take that. You've been through a lot, but let's extend my listing for another 6 months, and let's see how the rest of this goes. All right, so the next form. Now, a lot of people, don't understand that termination and deposit release because there are so many other termination forms. But really what those termination forms are is they are just notices. So when you terminate a contract, you're doing two things. You're giving notice of your termination, and then separately, you are requesting the release of the deposit. They're potentially two separate things, and you have to treat them as such. First, you have to terminate. And second, you can deal with the deposit and where it goes. So in my example of what I suggest people do, have the buyer send you an email, tell them, that you're terminating. That's the notice part. Now, the other benefit is I've had buyers tell me that they're terminating, only to change their mind when I actually send them the paperwork. Oh, no, I didn't mean I wanted to terminate. Oh, okay, never mind. So getting them to send you that email or having them sign something is hugely important for that reason. But there are other notice forms, and here's one of them. This gives you all the language that you would need to terminate under the condo or co-op review period. Um, it's not required to use a form like this, but it does give you the right language. In fact, if you wanted, you could copy this and paste it into an email and say, hey, here's, buyer's terminating, basically. Or if the buyer doesn't want to send that email, they can sign this, and that would be fine. But giving
Hmm.
notice is hugely important. Now, if we go to the other form here, there are other buyer notices. This one, and I don't really love the way NABOR has done this because there should be one notice form and one termination. I don't, they have multiple. And so this is the other notice form, and you check the box. Keep in mind, this doesn't have a box for everything that we would be terminating under. This is not the same as an as-is contract notice. You'd have to, I guess, oh, here it is. You'd have to check this one. So make sure you're checking the right one. And then the other thing, this is not the right form to use for a financing termination. That is somewhere else. Where's that one? I think that's called like the financing contingent buyer. Yeah, here it is. Financing contingency buyer termination notice. So they have a specific termination notice for terminating your financing. They have another one for terminating under the condo review period. And then they have another one for kind of everything else.
The financing one, it reiterates that you have to provide a statement of adverse credit action, and it has to
Does.
bring conditions in it, which
Yeah,
is,
and it's just restating what's in the sales contract.
yeah,
Again,
it is.
you could copy this, paste it into an email, and that would be fine too. And then I think this is helpful here. Seller acknowledges termination of the contract deposit and authorizes the escrow agent to release the buyer deposit. So I can see wanting to use this form because then it's one form and it includes the deposit thing. I don't see people use this very often though. So I think I've talked to NABOR about this, and last year they actually changed how they named all these forms, and they still really haven't fixed it fully. But last year, if you ever noticed, they called some of those notices, they called them cancellations, and then other ones they called terminations. And when you're looking through app files or Simplify or whatever system you use, you wouldn't see it if you put in cancellation. You would only see it if you saw exactly what you typed in. So they're they're making progress, but it's a little
They're
confusing.
trying on this because they mentioned the searches, the trouble agents are having when they do a search in the last meeting. So they're trying to be more cognizant of that.
Yeah, I think that they really should have sections, for what you're doing. So you've got all your sales contracts in a section, you've got all your addendums in a section, you've got your contingencies or whatever else. I don't know, but it would be nice if they could kind of break it up into pieces. What was the next one we talked about, Dad? Post-closing
Seller
occupancy?
financing?
Oh, let's do seller financing. I think that one's great. So, and then keep in mind, I am going through the NABOR forms because it's the ones that we're using the most, but Farbar has a lot of these as well.
Yes.
We're not digging into the details of the form. We're just trying to explain why you would use a form like
There's
this.
tools there they can use in this
Yeah,
market.
exactly. So let me find that seller financing form. There it is. Now I've got to share my screen.
You know,
All
you
right,
get
seller financing. So the first thing to keep in mind is when you evaluate a deal, you're looking at price and you're looking at terms. And actually, if we back up a little bit, I watched this video that a real estate broker posted, and I thought it was really smart. She said that sellers only care about two things, price and time. How long is it going to take for them to sell and at what price? That's what they care about. They don't really care about much else. Now, if you're probably not getting both, if you want top dollar, you're probably going to sit on the market a little longer. And if you want to be off the market as quick as possible, then lower your price. It really is that simple. And that's where sellers can get frustrated when they don't realize most people don't get both. Most. Well, one way to potentially get both is seller financing. So what I usually recommend is there's usually a buyer that really wants the house or the condo or whatever property it is. They just can't afford it for whatever reason. Maybe they don't have the cash available. They might be trying to sell another home. They might be selling a business. Or for business people, if they do own a business, they might not have the financials yet. They may need 2 years before they can get traditional financing. So I usually see where buyers in those scenarios will say, "Hey, I would love to buy your house. Would you be willing to take a loan on this property? Let me borrow from you." And why I bring up price and terms is that this is not an ideal term for most sellers. This is not a good term. It'd be better if they just got all the money at closing, obviously. But this might help you get top dollar. So yes, I'm giving up a little bit on the term. I have to do seller financing. I'm not going to get paid back for 12 or 24 months, but I'm asking full price. And maybe I'm getting even more because of an interest rate. Maybe I'm going to make money on this loan. Does that make sense, Dad?
it does, but if I could go back to a point you made earlier, sometimes from a tax perspective, it's better for the seller to spread the gain over a period of time. If somebody had just retired or they just had a really good year this year, to defer it to a year when they know they're going to be retired would save them in tax dollars. So I've used that angle quite a bit.
Now,
Also,
does the seller not have a capital gain right when they sell?
it's treated as an installment sale, so you're taxed as you
Yes.
receive the money, and they come up with a ratio over your basis and your gain.
Okay.
So you're not taxed, unless you're a dealer. If you're
Unless you're a
Toll
mortgage
Brothers,
dealer.
or you're Toll Brothers and you sell homes for a living, the installment deferral would not apply. But for the
That makes
regular
sense.
person, it does apply, so you can spread your gain out over a certain period of time. If you just change companies, you got a big, payout.
Yeah.
You don't want it all this year.
Yeah.
The other thing is, you mentioned people, they look at price and terms. If you got somebody who's not able to afford it, you can have like the payments be zero for 2 or 3 years, but have a 9% interest rate.
Yeah.
And I tell my seller, the buyers, they can afford it for 3 years. They assume they're going to be doing better in 3 years. Most people are optimistic. And likewise with the seller, you can just adjust your sales price depending upon what the interest rate is.
Yeah. Yep. Yeah, I like seller financing. It's usually a really good tool where both buyer and seller can get what they want. You know, they can maximize their sale price. The buyer gets a little bit of flexibility. Interestingly, you know, they're not risk-free. They're just not risk-free. We had Brandon Box from Cogent Bank on here a couple of weeks ago, and he was really great. He's a commercial banker and he knows how to evaluate a deal. And he says, I look at, you know, primarily, how am I going to get paid back? Like,
Right.
why am I giving this loan and how's the guy going to give me the money back? And then secondarily, I look at the property because we expect to get paid back. You know, the security is important, but how is the buyer actually paying this back? And that's what every seller needs to evaluate as well. They need to think like a banker. So,
Did you know my dad used to do a lot of seller financing when he
yeah,
sold property? And
yeah,
his rule of thumb, which worked every time except once, was to lend no more than 50% of the purchase price. You know, he got the deal closed. He'd use his profit sharing plan and it would lend money.
yeah,
He'd get his commission and he would get some interest on the loan. His perspective was, I don't care what the person's financial statement looks like. I mean, I have 50% cushion on my
yeah.
mortgage and my loan to a property value ratio. So I'm pretty safe. I think once in all the years he did this, he had to get somebody to foreclose. And he got the person paid up before it went to trial.
Well, and I would say, you know, when the economy is going great, everyone pays back their loans. But as soon as you see a little bit of stress, like we've seen the last couple of months or last year,
Yeah.
you see more and more of this. I got a call this morning from lender who says that, you know, the borrower's not paying their loan again. So you know, this is the time when you see this struggle. Now, I will say in general, when you have a market like this, buyers use any kind of loan. And so let me show you the sales contract again. This is just, I think this is just the standard sales contract. Yeah, this is a standard NABOR sales contract. So if you are doing a seller financing, you're going to put on line 37 the amount of that loan. So Dad, you mentioned, you know, maybe a 50% loan. I think that's a good low risk opportunity for a seller to entertain. You'd put that there. You would then set on line 81, you would check the box for seller financing.
The
But
addendum,
there are
well,
other loans that you could have a buyer do. And when you have an economy like this, you're going to see more loans. You're going to see a financing contingency on line 60. And I'll give you some suggestions. So number one, you got to know what kind of loan the borrower is getting. And the best place to look is on that pre-approval letter. So if the pre-approval letter says it's a conventional loan, that's what you'll check the box. If it's a VA or FHA, there's actually a separate addendum that you're going to include with it. FHA and VA loans, they have a couple more protections for sellers or for buyers. They still close. We do a lot of those kind of loans, but they're more challenging because the appraisals are a little different and the buyers have a lot more flexibility to get out of a contract. The big trick I usually put, Dad, what do you put for the number here, that percentage amount?
I tell my buyer, you put a number in there that might be what you can afford, obviously, but a little bit more than what your lender is telling you.
Yeah,
Depending
yeah.
on who the lender is, they may or may not have pre-qualified the buyer enough. They might have
Yeah,
something
and what about a seller? What would you tell a seller?
as high as you can get. Because again, if you're going to play games with, you know, what I try with the sellers is whether it comes from interest or sales price, it's still a certain dollar amount. You got to add the two of them together, and is that enough to make you happy? So if you're lowering your sales price to make the buyer happy, bump up your interest rate to see if you can recover some of
Yeah,
that perceived loss.
yeah, I
It's
would
like a car, you know, people
I'd put
don't
it as
know their
high as
interest
you can. I'd
usually.
put, you know, if the buyer thinks they're getting a 7% loan, I'd put it at 8 or 9 or I like putting market. I just
We're
say
trying to keep the deal
market.
together usually.
Kathy had a question. Kathy, did you want to unmute yourself? Well, if you want to talk, just let me know. Let's see. Oh, there's no, not yet. All right. Well, I would put market rate if I'm a seller. honestly, I don't like buyers playing games by putting a number in there because, if the rates change and the buyer decided not to lock in, I don't think that's very fair. If it's a quarter of a point higher than they wanted, that's not my fault as the seller. I didn't, wait to lock something in. Now, if
You know,
you're locked in, then you shouldn't really care about what the rate is either because you're locked in. So I don't know. I wouldn't
I
overthink
don't know
that.
if you've seen this, Christian, but occasionally you get a buyer who's just trying to get out of the deal and they're using a close friend who happens to own a mortgage broker company.
Yeah, I don't like that. I don't
And
play
you can
those
kind of
games.
smell whether they're acting in good faith or not,
You
or did they
can.
supply all the information or not. So it's not as automatic, yeah, they get out. You want to look into whether or not the buyer complied with everything the lender asked for. Or did they promise that lender, we found another property, well, we promise we'll use you if you
Yeah.
give us a letter on this. I've had that
Yeah.
happen quite a bit.
So the next thing that I have seen was the buyer and seller review periods. I don't understand these. I think they must have made these forms um, because we were tired of trying to convince New York buyers or New Jersey buyers that, we don't do buyer review periods. I think that's the only reason these forms exist. But here it is. You would include it as an addendum. Buyer shall have so many days to have this contract reviewed in their sole discretion. Basically, they can terminate for any reason. Essentially their advisor says it's not a good deal for them. I think there are other ways that you can accomplish this. You can wait to put in your deposit. In the NABOR contract, you're not liable for a deposit that hasn't been made. You can do an as-is contract, which I'm a huge proponent for. And if it's a condo, you're going to get this review period anyways. So I think buyer review periods you should stay away from as best as possible. I just don't like them. If you're going to go this route, or if the buyer makes you an offer with something like this, just give them an as-is contract and say, look, I'll give you 7 days, as is, all in. If you don't like it, you walk away. But after that, we're moving forward. I want simple. I did see a contract recently, and 2 years ago, this would have been laughed at. We wouldn't even open the email because our market was so different. But now this buyer felt strong enough where they included a buyer review. They had a standard contract with an as-is addendum, and then a financing contingency and an appraisal contingency, and I think there was like a inventory contingency as well. And I'm like, my head is exploding. It was just too much. I told the seller, I said, this is a 25-page contract. If you just use an as-is contract, it'll be 11. It'll be 11 pages. Give them 10 days. If they don't like it, just send us an email. I really believe in that. I think such a smart way to do it. I didn't want to have to read that whole contract. What a pain in the neck. But
Psychologically, I totally agree with you, Christian. When you get too many addenda, it makes people anxious. What is this? Why do we have, 6 addenda? And when I get those, I'll go to the buyer or the agent, whoever it is. The as is covers all this, and it's simpler. It's less threatening. You're more
yeah,
apt to get the seller to sign the offer. You're not going to run to their lawyer and ask them to interpret these 6 addenda.
right.
So, if
Well, what
it achieves,
about what about this form, Dad? The seller review. Now, this is pretty unique. Typically, the seller has no right to cancel a contract. There might be some contingencies that haven't been waived, like a financing contingency that's not waived. The seller has the right to terminate. This would add that maybe on the front end. Maybe the seller has 3 days to review. I don't see this very often.
you've seen it maybe 6 times in the last 40 years. It's,
Yeah, it's
unique
pretty uncommon.
circumstances.
I can't imagine if the seller isn't ready to sell, if they're nervous, if they're, whatever it is, don't sign the contract. If you're really waiting for your attorney to respond, you need to call a different attorney or you just don't sign it yet. Just don't sign it yet. I think that's That's a silly form. I propose that NABOR just gets rid of both of those.
I think we
That'd
need
be
to
great.
curate the forms following up on your comment, because for a new agent to look at all those addenda, it's overwhelming. Where do I
You know
start
what
with when?
the newest addendum that NABOR has? Honestly, I don't know when they included this. I assume they included it pretty recently because I only recently started seeing people use it. So this is the addendum to sales contract allergenic molds. So provided that paragraph 8A is applicable and notwithstanding in provisions to the contrary, uh, except for as disclosed previously, the presence of penicillin aspergillus or other allergenic molds within the interior of the dwelling exceeding the levels of such mold measured upon the exterior shall be deemed a defective inspection item for purposes of this contract. Wow. Have you ever seen this one, Dad?
I've never seen it. I don't like it. I would say just use an as-is contract. If you have somebody with health issues in your family and an allergenic mold might be a problem, just use the as-is. I mean,
I think they passed this while you were on the forms committee.
I know, I don't think so. Yeah.
Oh yeah,
I
this
think
was
you
not.
were on it at
I'd be
this point,
curious when it
Daniel.
was. I'll have to ask the forms committee when they actually passed this because it was either you or me. I can't remember.
I
But
think I was
basically,
talking
I
about this earlier with another agent who said, I really, people don't get what mold is, especially if they move down from up north and they're not used to having their air conditioning and their ductwork service on a regular basis. So they, honest to God, I mean, what is this? So
so I'm gonna swerve on you. I'm gonna do something that you probably don't expect me to say. I like this form. And the reason I like it is it gives the buyer more of an opportunity to back out if they find mold in the house. If they're up in the attic and there's mold on one of the walls from maybe too much moisture or like poor HVAC ventilation or whatever it may be, that freaks them out and we can't calm them down. They have the ability to ask for it to be fixed, and if the seller refuses, the buyer can terminate. Now, allergenic molds they're just difficult because some people don't think it's that big a deal and other people do. I don't like playing those games. If the buyer's not happy, I don't want them to be manipulated into going forward because of a deposit that they've made. At least on the inspection piece. Once they're past inspection, you know, there's no other information. There's nothing else to blame but the buyer moving forward. So I think this is good, but my preference would still be to use an as-is contract. If you have a buyer that proposes a deal on a standard contract, includes this addendum, maybe includes, a survey addendum. Have you seen that one, Dad? There's like
I've
a
seen it.
survey addendum. Let's see if I can get to it. I think I've
And
got
again,
two.
I think the as is easier to get signed on the weekend. If you add some of these addenda and the seller's going to run to their lawyer and say, what is
Oh,
this?
yeah, absolutely. So here's a survey addendum. Buyer has 15 days to review survey. Um, Buyer may terminate in their sole discretion. Doesn't say sole discretion, but it may terminate the contract prior to the expiration of the survey inspection period. So
Never seen it used. Never.
I've never seen this used, and I don't think you should use it. I don't even know what this means. If a survey reveals that the property is not the same property that was visually inspected by buyer, what does that mean?
Yeah, somebody put an addition on without a permit, I guess.
I don't know what that means. I think that means like, oh, I thought the fence was on our side of the property and it's actually on theirs. Is that what that means?
Those are layman terms, so I have no clue what that
That's a
means.
silly form. Don't use that form. If buyer, again, in this kind of market, you're going to see this sort of stuff.
I mean, look
And
at all those forms, Christian. I mean,
I
those
don't
really
like
should
it.
be curated.
I'm going to get so much crap from NABOR. They already think I don't like the NABOR
Well, if you
form.
have a new agent, where do they start? I mean, the contract's complex enough.
Contract's complex enough. So I did a video maybe a couple months ago, and the motto was terminations are brutal. Don't let them be a nightmare. Terminations are brutal. Don't let them be a nightmare. I think that these forms could be nightmarish. In a market like this, I want it as simple as possible. In any market, I want the buyer to have a free look for 7 days, do your survey, do your whatever, whatever it may be, within your inspection period. And
Right.
then if you want to move forward, great. If you want to renegotiate, I'll consider it. If you need to terminate, see you later. I'm not going to spend 3 weeks fighting over a deposit.
I mean,
It's
in
just
general,
exhausting.
I had two rules. One, you want to have as few things as possible to argue about. So as is simple,
Yeah.
cosmetic, working condition, is it defective? You don't have to worry about any of that. And is it threatening? I mean, you want it to look like a nice short fill in the blank form that, gee, this is a form. I don't have to run to the lawyer. They sign it on a Sunday or a Saturday,
Yeah.
piece of cake.
So I'm going to end on this. My head kind of exploded yesterday because I learned for the first time that they are considering, there's a bill that is passed I don't know, somewhere in Florida. They've passed something. And it's not yet at the governor's
The
desk, but
House passed it.
the House passed it. They want to extend the condo review period. It is currently 3 business days, and they want it to be 7 calendar days, I believe. That's what they're wanting to do. And it caught me by surprise because I've never even heard this be mentioned. Now, on a new construction condominium, every buyer gets 15 days.
Right.
I think they're probably trying to draw it in line with that a little bit better. And then they're getting rid of the business days and just going to calendar days. Trying to think
And if
my
it
thoughts
falls
on
on a
this.
Sunday, it rolls over to the next business day.
Yeah, so if you do a deal on Saturday, like you mentioned, Dad, Saturday's day 0, and Sunday doesn't count because
And you
it's
start counting on
not a business
Monday.
day. So you'd start on Monday. So if you really thought about it, a lot of those deals that sign on Saturday, Sunday, Monday, Tuesday, Wednesday, it's a 4-day inspection or 4-day condo review period. If you signed it on a Friday, Friday's day 0, well, Saturday doesn't count, Sunday doesn't count, Monday, Tuesday, Wednesday. Now it's a 5-day inspection period, and it's just confusing. Here's what I'm
Legal
excited
Resources
about.
is questioning who the heck asked for this, because the real problem is getting the documents, not having the review
Maybe it
period.
was me.
There you go. You're
It
just
was
a
me.
pain, huh?
And you know why? I think this is great. I think this is awesome. Um, I think more people will use as is contracts. Because if I'm giving you 7 days condo review period anyways, I'd rather give you 7 days as is. I don't want to deal with the both. Why would I give you 7 day as is or 7-day condo review and then 7 or 10 day inspection items? I'm not going to do that. I want it as simple as possible. I want 7 days and 7 days. It's all within my inspection period. If you don't want it, then you'll terminate during that time period. I think it was me.
The old
Wasn't me.
KISS acronym.
Yeah, I wish I had recommended this because it makes so much sense to me. I hope it gets passed because it'll streamline things for us. Again, I think, Dad, you mentioned earlier, the hardest part about the condo review period is getting the buyer the
Getting the
doc.
documents.
And
Are they complete?
what this House bill should have said is that, you know, if the seller doesn't give us the documents, the buyer can terminate. But that's what it says already. I think what I would like it to say is that the seller doesn't have the obligation, but the condo association does, or something like that. Like I don't think the seller should have this obligation because verifying when it was sent and when they signed it, what a mess. What a mess. All right, we're gonna leave. I was gonna leave on that, but I'm gonna do one more. The pre-closing occupancy addendum. And
It's an
it's an
amendment.
amendment, right, Dad? Isn't
It's an
what's the
amendment because
point of
nobody
it
in their
being an
right mind is going to
amendment
do it
versus an
up front.
addendum? What's the difference? Why did they do an amendment whereas the post-closing addendum is an addendum? Why
We
is
actually
it?
talked about this the other day, and the consensus was, no lawyer in their right mind would use it, initially before you had an inspection and check the place out. No seller would want to let somebody move their stuff in because once they're in there, I mean, this is not a lease, so you don't get the expedited hearing under the Landlord Tenant Act. You have to file a suit for ejectment. It takes
Yeah,
the same time period as a normal lawsuit would take. So the buyer could be in there, and they could be in there for quite a long time and not pay the second deposit, not do anything, and they're in there for a year or so. So if you're an
all good
attorney, using this would
points.
be crazy upfront.
All good points. I'm gonna zig where you just zagged.
You
I
love
love
it.
this form. I think it's great. See, let's use it all the time. Kind of. All right. So I'll start by saying this. You mentioned it, Dad. This is called an amendment because no one ever does this at the beginning. This is never something that just gets added on to the offer at the beginning. It's always something that comes at the end, and they just do an amendment to deal with some sort of issue. So that's why they call this one an amendment, because we're always amending the contract as opposed to it just being an addendum to the contract. So I think that makes sense to me. Um, my whole life, Dad, you've said that you don't like this. The whole idea of letting a buyer move in. You've mentioned that, well, the buyer hasn't closed yet. It'd be a pain in the neck to try and get them out if they don't close. And what if they sleep over for a week and they hear all these weird noises? They think it's haunted. What if they break something? What a pain, right? All those things are true. It could be bad, right? If the buyers are going to freak out and not like the house after a week of staying there, yeah, it's going to get ugly. It's going
Well,
to get ugly.
plus there's another
Or-
form, Christian, to
But there are some
go
good
do the
things
same
to it.
thing.
Well, there's some good things to it. So here's what I do like about it. Upon taking occupancy of the property, buyer accepts the property in as-is condition in ways any and of all buyer's remaining contract contingencies and all remedial action obligations of the seller or credit in lieu thereof, except to those agreed in writing. So I like that. Basically, the seller has no more maintenance obligation. If the air conditioner breaks, it's not my problem. That's the buyer's problem. If they break the shower handle one morning taking a shower, that's on the buyer. They have to start paying for utilities and things of that nature. You can probably change things like that. You can put an occupancy fee. You can negotiate, maybe they'll release the deposit to you. But the thing I like the most, buyer accepts the property in as-is condition, meaning that the seller's maintenance obligation ceases to exist.
I
I
think a
love that.
better form would be the addenda to enter into a lease. NABOR has that. That way the seller has the expedited hearing if the buyer doesn't put on the second deposit, doesn't comply with the terms of the contract, and the seller wants to get them out. So that could achieve all the things you just outlined and retain for your seller the ability to have an expedited hearing and have it be construed as a lease, not as something you have to sue an ejectment for.
The only problem is that form doesn't exist in NABOR. That's a FAR form.
Well,
So
it's still usable.
you could still use it, but that
FAR goes with the leases generally, and I try to avoid it in most situations.
I
But if
try
I'm
and avoid
representing
the
a seller,
leases. I can see the benefit, right? If you believe, and Brandon Box, the banker I was referring to, he made
right,
this point. He said that we make loans assuming the buyer's going to pay us back because
assuming,
they do so much due diligence on the deal that they underwrite them knowing the buyer's going to be paying them back. They know their
right,
finances, they know their business, they know where it's coming from, they know the property.
right,
And so I don't do pre-closing occupancies with people that I don't expect to close. That's first and foremost. They would have to be like I'm not renting to someone who has been a pain in the neck and they're causing all these problems and that's why there are delays. I would only do it if I'm the reason for the delays. If I keep causing these problems for financing issues or whatever it may be, and the buyer is a victim, right? So I'll be like, look, I'll let you move in. And usually we see this with probate issues. The seller didn't realize they still had to do more probate. The buyer was thinking of just terminating because they can't wait that long. And I say, well, hey, look, go ahead and move in, start taking over the house, all of start
mhm,
paying everything. And as soon as I can finish my probate, we'll close. And it keeps the buyer in the deal as opposed to the buyer taking advantage of the seller. So I kind of depends.
What I've seen a lot with both these forms is the buyer moves in, they've already had their inspection, and they start noticing things that the inspector didn't pick up on. And they're
That's
not
why it's
happy.
as is. I love it.
And then when they're not happy, and you should have told me, and I'm not putting
Yeah.
my second deposit down unless you fix whatever the hell
Oh
it
yeah,
is.
no, they better have their deposit in. So Ken had a follow-up question to the condo docs. He says if condo docs are attached in the supplements within MLS, does that count as providing the documents? I don't think so.
There's a
I
case out there, Christian, that talked about something being hyperlinked and whether that's disclosure, and I think the answer was no.
Yeah, I think that it's good. I would definitely do it. I would always put the supplements in MLS. Always, 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 always put everything in there. And then I would always send an email to the buyer's agent with all the documents as well. I would do both every single time without fail. And even beyond that, in the offer, when a buyer makes the offer, when I do the counter offer, I would say, hey, look, we won't be sending you the counter offer, or we're not going to sign this until you also sign the receipt. Because I want you to tell me, even if you don't send the receipt, I want you to send me an email saying, yes, the buyer has received all of the documents. That's what I want. I think that's the key. But definitely do both. Put it in MLS. Ken, keep doing that. That's awesome. And then separately, go ahead and make sure that you're emailing it as well. And then, be careful. The condo docs, it continues to be a major issue. People that, they're downloading all the documents from the property manager, and one of them is outdated, or an amendment is missing. And the listing agent just looks terrible when that comes to light. So you just have to be very careful. It's a pretty dangerous game. And, if we're going to make money on commission or doing closings for people, realize that there are consequences if we do our job poorly. And I'm seeing it. I mean, it's probably every 2 weeks I'm seeing deals fall apart because of condo deals, condo doc discrepancies. And one of the toughest things is when you thought you sent everything, you thought the condo review period was over, and then a week after that, the buyer terminates under the condo review period. And man, it leaves a bad taste in everyone's mouth.
Well, what happens if the buyer finds some amendments to the declaration that the seller didn't provide and they already signed a condo
Yeah.
receipt? The condo
They
receipt,
can still get out because you can't waive. I don't think you can waive that.
yeah, and it's just a presumption of that Saruman case you wrote an article about years ago.
Yeah. Well, thank you, Dad. I really appreciate it. I hope
Sure.
everyone enjoyed this. I think this market is a good market. It could be better given how much inventory we have, but we still have buyers out there. So be aggressive, be optimistic, and if you have questions, don't hesitate to reach out. Thanks, guys. Wish you luck.
There.